All right, everybody, welcome back. It's time for another deep dive. And today we're taking a look at Fastly's Q4 2024 earnings call.
Yeah, their edge computing platform, helping power some pretty big names out there like Spotify and TikTok.
Right. So you guys have been sending in your notes and reports and all that. And we're going to sift through it all and try to pull out the insights that actually matter.
Exactly. Trying to figure out what these numbers really mean for Fastly moving forward.
So should we just get right into it then?
Yeah, let's jump in.
Okay. So first things first, Fastly beat revenue expectations.
They did.
Coming in at a record $140.6 million for Q4.
That's right.
And that's a 2% growth year over year and quarter over quarter.
Yeah, not bad.
Not a huge jump, but, still a win in this economy, I'd say.
Absolutely, especially considering all the challenges they've faced recently. What's interesting to me, though, is how they got there. You know how they used to be so reliant on those just a few really big clients?
Yeah.
That's starting to change.
You're talking about that drop in revenue from their top 10 customers, right? Down to 32% from 40% in 2023.
Exactly. So they're not putting all their eggs in one basket anymore.
But does that mean they're losing those big clients then?
Not necessarily. It's more like the rest of their business is just growing that much faster. Revenue from customers outside the top 10 actually grew 16% year over year.
Oh, wow.
So it seems like that strategy of theirs to attract new enterprise customers is working.
So they're adding new customers while their existing ones are growing as well.
Pretty much, yeah.
That's got to be a good sign then, right? For their overall health.
Yeah, definitely a positive sign. And they're making some smart moves to keep that momentum going, too.
Like what?
Well, they're expanding into new markets like Latin America and India, for example.
Oh, okay.
And they're really beefing up their channel presence. Plus, they're changing up their sales incentives.
How so?
Well, they're focusing on both bringing in those new clients, A&D, selling their full product suite, things like security and compute.
So it sounds like they don't want to be just a CDN anymore.
Right. They want to be like the one-stop shop for all things edge computing.
Ambitious. But how do they stack up against the competition, though?
Well, remember how Edgio shut down their network?
Yeah.
That's actually created some opportunities for Fastly.
Oh, really? How so?
Well, for one, they've seen a bunch of former Edgio customers coming over.
Yeah. Okay.
Yeah.
So that's got to be good for them, right?
Definitely. But it also means more competition for those customers too, though, right?
Yeah, that's true.
You would think so, but it could actually end up creating a more stable pricing environment for the whole industry.
Okay, how so?
Well, fewer players sometimes means less of that, race to the bottom on prices.
Interesting. So it might be less chaotic.
Yeah, potentially. Okay, so we've talked about the competition, but what about the elephant in the room?
What's that?
The whole TikTok situation.
Ah, right.
So ByteDance, TikTok's parent company, they make up less than 10% of Fastly's global revenue at the moment.
Okay.
But Fastly's being very cautious with their 2025 guidance.
In what way?
Well, they're actually excluding any potential U.S. TikTok revenue because of all the legislative uncertainty.
Right. Makes sense. I mean, better to underpromise and overdeliver than the other way around.
Exactly. It shows they're thinking long-term and not just focused on short-term gains.
Okay, so we've covered like the top level stuff, right? Diversification, new markets, Edgio, TikTok. But what about the actual specifics? What's driving all this growth? What are they actually selling?
Well, a big focus for them right now is security. They've got a whole suite of offerings, actually.
Oh, like what?
Well, they've got DDoS protection, next-gen, way, and bot mitigation.
So they're not just keeping up with the market then?
Nope, they're actually innovating.
Yeah, I saw something about an AI Accelerator. What's that all about?
Oh, that's pretty cool, actually.
Uh-huh.
It's designed to tackle those performance challenges that come with generative AI.
Okay, so like faster ChatGPT, faster Google Gemini.
Exactly. They're trying to be at the forefront of that whole wave.
So they're betting big on AI being the next big thing at the edge.
Yeah, they are.
But is it all hype, or do they actually have the tech to back it up?
I think they do. Their software-driven edge cloud platform is a big differentiator for them.
How so?
Well, it offers everything from content delivery to security to compute to observability all in one platform. That kind of flexibility and scalability is really attractive to developers.
Especially those working on, those cutting-edge AI applications, I imagine.
Exactly. And it's not just talk either. They've really ramped up their development processes.
Oh, yeah.
And they're pushing out new features faster than ever, especially in security and compute.
Okay, so they're innovating, they're diversifying, they're expanding globally. But what about their financials? How are they actually performing?
Well, in Q4, their gross margin was 56.5%.
Okay.
Down slightly from the previous quarter, but still healthy.
Why the dip?
Mostly because of increased bandwidth costs
Ah.
and a bigger mix of traffic coming from regions outside the US and Europe,
Okay.
where margins are usually a bit lower,
So growing pains.
basically. But they're doing things to manage those costs.
Like what?
They're really focused on optimizing their network, and they're scrutinizing their customer data
To do
to
gains.
make sure it's accurate and to identify areas for improvement.
So they're not just throwing money at the problem.
Nope. They're being strategic about it.
Uh-huh.
And their guidance for 2025 reflects that.
Oh, yeah. What are they projecting?
They're expecting revenue between $575 million and $585 million,
Okay.
which is about a 7% growth year over year.
And how about their profitability?
Well, they're aiming for an operating margin of negative 2%,
Okay.
a significant improvement from their 2024 operating loss of 5%.
So still not profitable, but getting there.
Exactly. And they're also projecting free cash flow to be between negative 20 million and negative 10 million,
Which is?
a big jump from their negative 36 million in 2024.
Okay, so they're definitely moving in the right direction.
It seems like it.
So overall, it sounds like they're making progress. But what does it all actually mean for Fastly, in the long run?
Well, they're clearly in a transition period right now.
Okay.
They're moving away from just being a CDN and becoming a more comprehensive edge cloud platform provider.
Right.
They're diversifying their customer base, expanding into new markets, staying ahead of the curve in things like security and AI.
But it's not all smooth sailing, though, is it?
Of course not.
What are some of the challenges they're facing?
Well, there's the macroeconomic headwinds, obviously, increasing competition,
Yeah.
and those lower margins in emerging markets we talked about.
Right. But overall, their strategy seems to be working.
It does. They're seeing growth, their financial performance is improving, and they're positioning themselves as a leader in the edge computing space.
So cautiously optimistic.
Yeah, I'd say so.
Yeah.
But before we get too far ahead of ourselves, I think we should take a closer look at some of the specifics of what they're doing to execute on this strategy
Okay.
and what it might mean for investors.
Sounds good to me.
So we were talking about some of the financial highlights before, but I think it's worth digging a little deeper into some of Fastly's key strategic initiatives.
Yeah, I'm really curious to hear more about that AI Accelerator you mentioned earlier. It sounds like a pretty big deal for them.
It is. They're basically trying to solve one of the biggest challenges facing AI adoption today: performance.
Okay.
These large language models require a ton of processing power, which can make them slow and expensive to run.
Right. So how does the AI Accelerator help with that?
It's all about caching. They're essentially storing the results of common AI queries on their edge network. That way, when someone makes a request, the answer can be delivered almost instantly without having to go all the way back to the origin server.
So it's like having a cheat sheet for the AI.
Exactly.
Hmm.
And then that can make a huge difference in terms of both speed and cost.
Hmm.
Fastly claims it can deliver up to 9 times faster response times and reduce costs significantly.
It's pretty impressive. But who's actually going to use this thing?
Well, think about all the AI-powered applications out there. Chatbots, virtual assistants, personalized recommendations, content generation tools, all of that.
Oh, okay.
All of those could benefit from this kind of performance boost.
So anyone building the next ChatGPT or Google Gemini might want to be talking to Fastly then.
Exactly. But there are some downsides to this strategy, of course.
Like what?
Well, it's still pretty early days, so there's always a risk that it might not take off as expected.
Right.
And they're not the only ones in this space either. Other edge computing providers are working on AI solutions too.
Yeah, it's a competitive market. But Fastly seems to have a bit of a head start though, right?
They do, and their existing network infrastructure gives them a good foundation to build on. They've already got the global reach and the scalability to support these kinds of demanding applications.
Okay, so AI is one big bet for them. What else are they focusing on?
Security is another major area of investment for them. They've been expanding their security offerings pretty steadily. And they've got a pretty comprehensive suite of solutions now, everything from DDoS protection to next-gen WAF and bot mitigation.
So they're trying to protect their customers from all sorts of online threats. But is that really a differentiator? Don't all edge providers offer security features?
They do, but Fastly's taking a more holistic approach. They're integrating security into their core platform instead of just offering it as an add-on. That means their customers can get all the protection they need without having to manage multiple vendors or deal with complex integrations.
That sounds pretty appealing. But are they actually seeing any success with this approach?
They are. They've been winning over some pretty big enterprise customers with their security solutions.
Oh, wow.
And they're continuing to innovate in this area. They're even working on a new serverless computing platform
Oh, really?
that could open up even more possibilities for developers.
So they're not just standing still. They're trying to anticipate what's coming next and make sure they're ready for it.
Exactly. That's what makes them so interesting to watch. They're not just reacting to the market, they're trying to shape it.
Okay, so we've talked about AI, we've talked about security. Anything else we should be paying attention to?
Their expansion into new markets is definitely worth keeping an eye on. They're making a big push into Latin America and India,
Okay.
two regions with massive growth potential.
But aren't those also very competitive markets?
They are, but Fastly has a few advantages. They've got a strong global brand, a proven track record, and a platform that's designed for scalability.
So they're not just dipping their toes in the water. They're going all in.
Pretty much, yeah.
But does that make sense given their current financial situation? They're still not profitable.
Right, that's true. But their guidance suggests they're on a path to profitability, and their free cash flow is improving significantly. They're also exploring options like leasing to further strengthen their financial position.
So it sounds like they're being pretty careful with their resources.
Yeah.
But is that enough to compete with the giants in this space? Like Amazon and Google?
It's a tough fight, for sure. But Fastly has a few things going for them. They're more agile and focused than the big players,
Okay.
which allows them to move faster and innovate more quickly. And their developer-centric approach is a big draw for a lot of companies.
So they're playing to their strengths. But is that enough to make them a winner in the long run?
That's the million-dollar question, isn't it? It's still too early to say for sure, but they're definitely a company to watch. They're disrupting the market, they're pushing the boundaries of technology, and they're not afraid to take risks.
Sounds like it's time for our This Is Not Financial Advice segment,
Oh, yeah.
where we explore some of those risky but potentially lucrative trade ideas.
You ready to have some fun?
Absolutely. But first, a quick word from our sponsors. We'll be right back with a trade idea so crazy it just might work. And we're back. All right, so before the break, we were about to get into that This Is Not Financial Advice segment.
Right, where we throw out a crazy speculative trade idea based on what we've learned today.
Yeah, just to be clear, this is all purely hypothetical. Just for fun.
Absolutely. Not actual investment advice.
Right, do your own research.
Wow.
Talk to a financial professional before making any decisions.
Always.
Okay, so disclaimer out of the way. Let's have some fun. We were talking about how Fastly's betting big on AI at the edge. What if that bet pays off like way bigger and way faster than anyone expects?
Like, imagine if their AI accelerator just becomes like the gold standard for generative AI, the
Yeah.
platform that like every developer wants to use.
And on top of that, what if those new markets they're going after, Latin America and India, really take off?
You could see like this massive surge in demand,
Right.
sending their revenue and stock price through the roof.
Okay, so here's the totally irresponsible, not at all recommended trade idea. Buy Fastly call options with a strike price way above the current market price.
And make sure those options have an expiration date far enough out to give this whole thing time to play out.
Right. So if everything goes according to our completely made-up scenario and Fastly's stock just explodes,
Those call options could be worth a fortune.
but, and this is a big BUT, if Fastly doesn't perform as well as we're imagining,
Right.
those options expire worthless and you lose your entire investment.
Which is why this is not financial advice. It's high risk, high reward,
Exactly. So don't try this at home, folks. Just a thought experiment,
but a fun one.
for sure. Okay, any final thoughts on Fastly before we wrap things up? What should listeners be watching for in the coming months?
I think the next few earnings calls are going to be crucial.
Yeah.
We'll want to see if they can keep this momentum going, keep growing their customer base, and start showing some real progress towards profitability.
And keep an eye on how they're doing in those new markets, Latin America and India.
Exactly. If they can gain traction there, it could be huge.
And of course, any news or updates on that AI Accelerator, that's the wild card.
For sure.
All right, well, I think we've thoroughly dissected this earnings call.
I think so.
Thanks for joining us on this deep dive into Fastly's Q4 2024 performance and their plans for the future.
It's been a pleasure.
And to all our listeners, thanks for sending in your questions and notes. We'll be back next week with another deep dive into the world of earnings calls. Until then, stay informed, stay curious, and remember, this is not financial advice.